good afternoon. We are live again. Today is episode 12 and it's a special edition because it's a hybrid event. What happened is, during the briefing call I normally have with my guests, we started discussing and talking, and our technical team was listening in. They were like, oh, that's already so exciting. So we decided like, hey, don't you want to come over to Berlin? We do this live because we have much to speak about. So we are using Swapcard today. And there are a couple of features. First, you can connect with everyone. Yes, you just can chat with them. You can do meetings. Second is we have a poll section. So please answer the polls. I will read them out later again. And third is you can ask questions. I will see on a separate screen the questions. Another thing is some people watch this live. If you're live, your advantage is you can interact with us. Some people watch the replay, we'll publish this on YouTube or here on Swapcard, and others just listen to the audio via podcast later. First disclaimer, because we speak about trading today, I have to officially tell you, or Raul will do this, trading is always on your own risk. You will not receive any trading advice here today. And second, past successes never count for the future. So when someone was very successful in the past, doesn't mean he will be successful in the future, just as the disclaimer here. So who's our guest today? Well, it's Raul. I would describe him in 3 bullet points: nerd, chess, and Commodore 64. That's his brief story. So he was a nerd in school. I think they did a lot of mobbing on him. And I know his case. I think many of us may be nerds in schools. By the way, just in the meanwhile, the game of coins today is my topic. And he got his first computer, then he started building, working with it, and that's how he got into computers and machines, etc. Second, he is ambassador of Rise of AI. And the story behind there is, how did I know about Raul? Well, there was one person who was always buying the first ticket. And later told me he even wrote a script, scrapping our website to see when we publish tickets, so he would be the first one to buy a ticket automated. I was like, man, that's a dedication, that's a passion, let's talk to him. And Veronica talked to him and I talked to him, and then we figured out, hey, he's great, he's like us, he's, crazy. He became an ambassador of Rise of AI. Second, then he became current World Cup champion for Forex trading. So I have no clue, but this seems to be like a 1-year program where, you compete against other traders with real money, and if you win this, you receive, I think, a golden handshake or something. Nevertheless, he is currently number 1 in the world championship. We will talk about this later. And third is, what I like about, he rebuilt an AI after himself. So I call it a narrow AGI. He has built an AI which is a copy of his trading skills. So a little bit AGI-like, but it's a narrow one, really, really focused. And saying that, oh yes, I forgot. As usual, introduce yourself. So use the chat to publish where you are, where you're based. You can share your LinkedIn profile. Just say hello to everyone so everyone has a moment. And my guest is already here. He's pacing back and forth. So I would say this is the moment. Raul, please come to the screen.
Thank you, Fabian, for the invitation. I'm very happy to be here with you today.
Yes, we will have to practice. I look at you, but I also will look for the camera, so you're all involved. You're all our imaginary audience out there. Please, I hope you have applauded when he entered the screen. Let me say a couple of more words about Raul, so you have a better picture. First, what is interesting is he started to study. He has a mediocre Abitur from Bavaria's.
Bavarian, okay.
Yeah, so he calls it Bavarian Abitur. I have a Prussian Abitur. But, that's his excuse. He didn't went to one of the top business schools. Just saying this, because he's a smart guy, but he didn't went to the top business school. He went to Nuremberg. I didn't even know that they have a university at Nuremberg. Yeah. I told you. Yeah. But interestingly, his professor figured out his skills and hired him right away in the second semester, became his mentor. They started a consultancy together in the area of, I would say, digitalization in the financial industry. And Raul, being a student, already went to the top levels of all global banks and told them how the internet works as a student and how to build a website, etc. He told me confidential who he already advised, and it's an impressive list. One example, he then, kind of left his job, and as a student started to be a free consultant, earning 1,500 euros per day. I mean, honestly, that's pretty good money being a student. And he didn't stop there. He built, by the way, one of the first robo-advisor out there. You can Google it. It's moneyfilter.de, moneyfilter. It's still out there. So he invented robo-advisor before the term was already there. So that's his area where is he coming from. He won the Iron Trader for Germany. So it was a competition where he competed against 2,500 traders. And within 2 months, he made over 600% virtual on his account. So that gave him a lot of PR. We will come to this. The keyword out there is behavioral finance. Yeah. Yes. So that's his own strategy. And he has a story. I mean, he joined, I think, 2 startups / hedge funds which failed. He worked for large corporations. He did asset management for a couple of billions. He worked for smaller banks. I mean, he did in the financial industry everything, and he's just 30s. So I like this. I mean, stand up for a second. Just look at him. Look at his pants and his outfit. He is a financial guy, and he doesn't look like one. And I think that's why I like him. That's why he's on the show today. Let's start with your, past or where you're from. So first, you're a kid from the rural areas. Dorfkind?
Yeah, that's correct. Yeah, it's a Dorfkind in Germany. Yeah.
Yes.
Yeah.
Me too, by the way. When did you start trading? Like, when did you start to invest money while others are out there and shooting itself, and you started? How did you think about, I can use the computer to make more money?
Yeah. First, the very first at the beginning, I have to also do a disclaimer. You have done one. I have also done one. So just be always in mind that at the end, trading and especially trading with futures and Forex involves substantial risk of loss, and it's not suitable for everyone. And also keep in mind past performance is not necessary indicative of future returns. So, okay, and I'm not a financial advisor. We are not a financial advising show. So please keep in mind you're doing everything on your own behalf. And this is just a briefly disclaimer. Okay. So we have 2.
Okay, that was the disclaimer. So now the question is, how did you get into this?
Well, yes, it started at a very young age. I was, as you said at the beginning, I was a nerd. At this time, I was studying, and no one has this term nerd, but I was one of these kids who was in a chess club. I was in a chess club, I was 6 years old, so very, very young. After the kindergarten, in the first class, I was in a chess club, and the average in this chess club was 50 or so, something age. And I read a lot of books, and I was very into astronomy. And then I had something like an uncle. I'm not saying it was really uncle, it was a friend of the family, but he said, wow, okay, you need something, and this helps you for your life. And this was one present at a Commodore 64. And at this time, I cannot speak English. I cannot type really because I was very young. And but I was so interested in this Commodore 64 that I wanted to learn how to do it and how to start a game. It was not easy to start a game, okay? Because you have just commando lines.
What operating system do you have on a C64?
It's a good question. I was too young. I'll be really honest. I don't know how to figure it out to do everything of this. Because there was no, as today, there was no mouse. You have no something like an user interface. You have just commando lines. And it was very hard with disks. And just to start a game was very hard. And at this time, I started to learn BASIC. It's a very, very, very easy language. And then you can do something like go to line and how is your day? Yes and no. And this was the first thing. But my parents just said, wow, okay. He has fun with this Commodore 64, and then I got the 368 and the 468, and then the first Windows 3.11 with a user interface, and this was very cool because it was far easier.
Make it shorter. How did you start trading?
Okay, how did I start trading? Well, I just wanted to figure out an easy way to make money, and after now something like 20 years. I recognized, I think it's the hardest way to make easy money. So, to be honest, it's not easy, it's really hard. And I wouldn't recommend anyone to do this. But at the end, I thought there was newspapers, and I just looked at one stock, And next day, if the stock was higher than the day before, I said, wow, cool, I made money. And then I run to my mother, wow, cool, I made money, and yeah, that's cool. And what to buy next? And this is, I thought,
did you physically buy it or just imaginary?
No, imaginary. Just imaginary. I was 14 years old or
14
something.
years old.
Yeah, but I thought, wow, this is easy. You just buy something, and next day you can sell it, and it's easy money. And
the basic rules in business is buy low, sell high, pay late, collect early. I think this is then it's the future options.
yeah, it is. But at the end, it was just my imagination. But I started then trading the first systems. I built my first system when I was 16 years old, and participating on the first competitions at the bank was ABN AMRO. I think it was a competition. And the coolest thing about it is I won this competition regularly with my first trend following system. I was 16 years old. I think it was the problem because I have not the legal age for.
So you used your computer right away.
Yes.
From the beginning, so
From the very beginning.
For me, I started. My parents always had stocks, and my grandfather was in a bank, so I already had this feeling. And when I was born, I got like a portfolio of stocks, which I didn't have access to, but I could always follow them for a couple of years. And I started a virtual competition with Sparkasse. And I won. I was like top 100 in Germany at the end, so I won there the national, regional thing where I traded virtual with stocks. Yes, but I didn't have a system. I just did it by gut feeling.
Well, this is why I said before I was starting so early with programming. Then it was just naturally to say, okay, let's make a system for this.
So you had a trend system.
A trend system. At this time, I was trend following, and I just got lucky. So my system was not good. My system was just crap. Okay, but at the end, I was just lucky, and this fixed me on because I got a lot of presents, and I won all the time, and I always get next delivery. And my parents, what is this? Oh, this is an PDA. And what is this? This is gold. And what is this? This is money. And why you're getting this? Because I'm winning all this competition in the internet. And with this money,
you got money from the internet. It sounds like Silk Road.
No. It was crazy at this time because it was 20 years ago or 15 years ago, something like that. So, and this was just very unique. You're always getting these packages with cool stuff inside. And I sold it on eBay. It was the first eBay, and I always sold it. And with this money, I started my first account. Okay. So when I was 18, then I was trading with the real money based on this winnings I made from the competitions.
Okay, so you started with 18 your first trading account.
Yes.
And then you continue to use your self-built system always to enhance this. Then we jump into you being student.
Yeah.
As said in Nuremberg. As I said, I didn't know that they have a business school there.
It's a cool city. It's really a beautiful city.
Yeah. But most okay. And then you with your professor, you started a company because he saw your talent and he did the sales, and you were just the talent, the wunderkind he used to say, "Oh, that's the genius who's building the system." I assume.
Well, at the end, I think he really in the early stage of my involvement, he has seen some talent in programming, in everything about internet, and also about capital markets. And he was then, well, okay, why we don't have a consulting company and helping banks with digitalization? And at the end, this company was extremely successful, and we made a very, very great job for these banks. The only thing, to be honest, I was 20 years old or 19 or something when I met the first people on C-level sometimes or very high management levels in banks and advised them. And this was, wow, okay, it was a crazy situation, but at the end, the things we have done were great. All the clients said, wow, what you have done in this time is unbelievable. And so it was a very cool experience, and it helped me to get more confidence.
Can you share me what you sold them? Was it like building a website or how to digitize processes, or really like investment strategies, how to do this?
It could be everything.
No, it's just it's fine. You just don't. You're so excited. You can talk a little bit quieter because the microphone is very sensitive.
Okay. Okay, thank you. No, we had a very, very large portfolio of different projects. So it was sometimes for internet. It was how to, let's say, optimize your channel of sales. but it can also be optimization process in the bank. But it can also be, let's say, very, very specific about trading, how to help traders to get better, because some traders have the risk to lose their money very, very fast, and how to protect them, how to educate them, for example. When you are at a broker, how to get them to a better level that they are not dying, because when they are dying fast, they don't make revenue.
So I jump now to 2011 when you published your own robo-advisor, still a trending topic today. It's called, as I said, Money Filter. And then you won the German version of the Iron Trader, because it's an international competition, but you won the German one, and then you competed international. You traded, I looked up the numbers, it's like 600% virtual in 2 months, so pretty impressive. But most interesting is the PR you got. You said like you were invited all over the world and still being a student, right?
Yeah, that's correct. That's correct. But just to say, Money Filter is not my thing, because it's on the company of my professor. Just to make it clear, but as you said in Iron Trader, it is a crazy situation. Because there was a show, and this show has 2 parts, one reality part and one virtual part. Because at this time I was a consultant for banks. I built my own consultancy. I was also working for the university and traded, and so I had no time for the reality show. But because I have not the time to be there. This time sleeping was very, very rare, and so I made the virtual part, and this is correct. And I won this virtual part. I was invited to Frankfurt and won this also. And the thing is, the people asked me how you do it. Well, how was it possible to generate this return in this short amount of time? And
now I want to know this too. How did you do it?
Yeah, to be honest, in these competitions you are using a lot of leverage and a lot of risk. So it was, to be honest, a lot of luck also. But I was using, and this is what I'm using also today, and all my academical work and research papers I made was about behavioral finance. So I'm very much into how people behave on capital markets, because people have some biases. They have anchoring, for example, they are overconfident, they have a home bias, and so on and so on. And these biases, the most people are just discussing about these biases on a very, very academical level. But I was more how to use these biases of other people.
So give us an example.
An example is just to say there are 2 extreme values. One is panic, and one is extreme euphoria. And if it's possible for you to track these levels of euphoria or panic, then you can make, on a very, very easy way, a trading system, just scanning for euphoria and just scanning for panic. And if there is panic, you have to buy. And this is very tough, because
you have to grab the falling knife.
Yes, and this is hard because it's against your human nature. Yeah, it's against your instinct, because you want to go away of the situation. This is what the most.
But already Rothschild said this. Like you buy when everyone is selling. I mean, Dirk Müller is saying this too. Like you have to buy in the panic. I purchased most of my stocks when everything was going down. Like. You just never know when the right point is. So against your instincts, you buy when everyone is selling. Yeah. But how do you measure it? How do you know there's a panic? And how do you know it's the right panic for the right stock?
That's a good question. The coolest thing is, with the rise of the internet, we are getting more and more data. And this is where you can use, let's say, crawlers for collecting this data. And people are communicating, let's say on Twitter, on boards, and so on and so on. And this data, just for example, but there are also surveys. There are a lot of data you can use. But for me, it was important to collect this data, to analyze it, and based on this data, I know where in the market, on where specific point, where is enough panic to go in, or where is the situation I have to go short. So take this different position when the market is too euphoric.
And then the question is this happening all the time, or is it this happening every couple of years when there's a huge crisis? Do we have panic more often?
Yeah, we have it often, because the most people are just looking on very, very big equity indices like S&P or DAX.
Okay.
And when you're looking on this, the problem is you have just. It's not a problem. I'm happy if there is no crisis in this world, but at the end you have all 5 or 10 years one big crisis, and you have some minor cycles of crisis. But at the end you just get one signal a year, a very good signal. And what I'm doing, and this is something I think very unique, is I'm scanning all asset classes. I'm scanning commodity markets.
So let's commodity markets means resources like
Yes.
Gold, silver,
Copper,
hay,
iron,
copper,
everything.
food, everything,
Everything.
garlic, etc. So all, which is, I think commodity market is huge. It's like bigger than everything. Like I think it's bigger than stocks, or?
It depends. I'm not sure, because there are some parts of, let's say, gold is extremely high.
Okay.
But stocks, I would say,
Gold.
yeah. So there are some markets in commodities that are very large. Yeah.
Okay, so you look at commodity market.
Yes.
Second is then
Then the next thing is I'm also in the currency markets, because
currency market,
yeah.
which is forex trading, right?
This is forex trading, and the coolest thing is about it, they are uncorrelated to each other. They have some correlations, minor correlations, but the most important thing about is you can generate much more signals when you are in all asset classes, and this helps you to not to have one signal a year. Then you can have 100 signals if you are scanning all.
So let's assume you have a trend building system, or like a signal spotting system at the beginning, because it's not AI, it's not trading its own. So it's just giving you on your dashboard hints like, hey, there's something happening. So let's take the example of Wirecard. Because I will use this more often. Wirecard is panic. I mean, there was euphoria, and then there was panic, but it crashed to zero. So if you buy it when there's panic, you still lose money. How can you buy something falling down and expecting that it will rise again?
Yeah, 100% correct. To be honest, it's very hard on a single stock.
And we already, I will switch to this here.
Oh, okay.
There, because now I think we are now speaking about money. We skipped a little bit of your CV. That's fine. We are now right in the topic.
Yes, it is very hard, as you said. I would not recommend everyone to go in this single stock area, like you said, because there is a risk of bankruptcy of single stocks. You have this risk not in this case for currency and commodities. Commodities not tend to be zero. Okay, there is VTI and you got negative rate, but at the end it is very uncommon. They are just
wasn't
swinging.
it like the ruble, the lira, like the Turkish won? Didn't they go down and they stayed down for a really while? I think because I have Russian stocks, and they are down for the last 6 years because of currency. I mean, it crashed and never came up.
Yeah, I think this is the very hard thing about this. You have to look out for very extreme points, and just what I'm doing, I'm not too long into a situation like this. So my average for a trade is, from the duration side, is just 30 days, something like that.
Okay, 30 days.
Because I'm not too long into this. As you said, if you are too long into Russian ruble, then it can be very painful. So you have also go to the right time horizon. Yeah.
So I will continue with this. So you said you look at forex, commodities, and stock, and because you have so much bandwidth, you have up to 100 signals a day. Your system is spotting the signals, and then it's either a buy or sell signals. So you do it, and you go mainly after panic or euphoria. These are the main signals you use?
These are the main signals.
From the behavioral finance. So behavioral finance, in my words, means you look at human behavior, which is irrational, and you try to make money, at the end it's money, on the wrong emotional behavior of humans in a normally rational market.
Exact. I'm something like a corrective for the market, because when everyone is selling, someone has to buy, and I'm the guy who buys. So, but the problem is it's against our instinctive. It's very hard from an emotional side. So if you want to do something like this, because it's very hard, you usually have to do it automated. So because it's too hard to do it as a human. Yeah.
So this leads me to, we already have 2 live questions.
Oh, we have questions. Cool.
One from John Piper and one from Attila. And both are similar. Attila asked, what is the best place to scrap the sentiment of in your experience? Like, where do you scrap it? And the other one is, which Twitter accounts does your algo scrape? Or how many followers do they need to have? So a little bit, let's talk about your sources. How do you get the feeling, like the sentiment, like this purchasing signal?
Yes, okay, that are very good questions.
So what sources do you use, for example?
Yes, well, we can stay in Twitter, because I think I'm a bit famous about Twitter. It was 2013 and at a quant conference, and no one had the strategy at this time, because Twitter was very young as a source. And I was building the first or one of the first crawlers for Twitter messages. and it was not a good system, but it worked for me. And in this time, I just tried to get a sentiment based on the Twitter message. So I'm searching for filters. So for example, the most are with tickers, so you know what stock they are talking about. And after you have this ticker, then you are searching for some keywords, because good, great, want to buy. So this is a positive sentiment, and of the other side you have these negative words. And this is a very, very simple approach. Today we are far more.
So it's a keyword spotting. It's
keyword
NLP,
spotting,
natural language processing, but it was keyword spotting.
Yeah, it was keyword spotting, and today we are far better, because today we can also use negotiation. So if someone says, I don't like Adidas stock, and for me it was before it was like Adidas. It's not wrong. It's wrong. Okay. Today we can work with this, and some saying you can also getting other informations like ironic stuff. When someone say something in ironic in Twitter, but I cannot do it, but some say that they can do it.
So how do you screen whole Twitter, or do you have pre-selected everything which is related to trading and financial industry?
Yeah. Well, not whole Twitter, because the volume is far too high. It's not possible. When I was starting it in 2013, it was possible. So because Twitter was not that big as today. Today is no chance for me, because I'm a one-man show. But to be honest, there are two things I would recommend for. If you want to do it, there are two things. First, you build a sentiment on the broad market. For example, for the S&P, for gold, for rates, for.
Okay.
So this is one thing, and you're looking, as you said,
it's like your baseline a little bit to
this
see
is my
which is going out.
Yeah, this is my baseline. I'm searching for outliers. I'm searching just for outliers. And this is something very, very, very useful. But, and this is a very good question from the other guy, there are also special accounts in Twitter with extremely high influence. And they have to be covered on another way. So there are some trading strategies you can build on them. One trading strategy I was using at this time was searching for accounts of high influence. And if this account, for example, promotes one stock, you have to buy whatever this cannabis stock in Canada, and they are most of the time penny stocks. They are reacting very, very hard. And then there was a seasonality.
By the way, with crypto the same. In the crypto space.
There's just the movement at this moment, and I don't want to buy the stock. This is not what I wanted. But the cool thing is when someone like this, for example in the US, just cover Jim Cramer. And if Jim Cramer says, okay, this stock is cool, you have to buy it, then it's skyrocketing something like half an hour. And then it after half an hour it gets in a correction. So if you are fast enough and you are automating, you can go on the long side. So you are playing the first rush. And also, and when you are very good, and
then you sell.
Yeah, and then you sell, and then you are going short selling.
So, is your system doing this?
It was doing this. It was doing this. Now it's something like this situation. I'm searching for people in Twitter or in other sources who have alpha. Okay, I'm.
Explain please what alpha is.
Okay, alpha is an risk-adjusted over return. So, and some people in this world generated some systems, or they have a very good feeling or whatever, and they post their trades, and you have to find these guys and you can follow them. So it's something like collecting the alpha from the internet, collecting the wisdom from the best of the best, and this is a very, very interesting strategy. You can use it.
Do you follow them, or do you have a not disclosed account which is following them?
I have a not disclosed account who follows it.
Okay, so you can't just follow Raul's followers or fans, but other way, but he has an undisclosed account. When we are in between, because we have from Max, Patrice, and John another question.
Wow,
I will ask them. First, do you have your own NLP model for the sentiment analysis, or do you have a back test to your strategy? Second, what are other financial sources versus do you have like libraries, APIs you're tapping into? And the third is, would you be able to go as far as coding an algo that reads chart annotations on Twitter stream, or would that be impossible? So 3 questions a little bit together.
Well, okay.
First, do you have your own NLP model, or do you use libraries, existing frameworks?
No. I'm just using libraries, and to be honest, it is not the most important thing for my situation. I'm one person. I'm not a big company with 100 people. So if there are libraries, for example, I use also the backtesting library. They are here, and I'm using a lot of APIs for data. For the basic data, you can use Quandl, you can use Yahoo Finance if you have nothing else, or you can use Tingo, or so there are a lot of resources and they are for free. But if you want to do it more on a professional level, you have to buy and
like Bloomberg.
Well, yes, of course, but Bloomberg is very, very expensive.
So do you pay yourself for sources, for data?
Well, yes, I'm paying for data, but I'm not paying for Bloomberg just because Bloomberg is very expensive. So
okay, let's
yeah.
But so you pay for data. I would say for labeled data.
Yes, because it's better to get this labeled data, because if I have to classify all this data, it's very, very hard. So I just want to be more pragmatic, as I was before. As a child, I was always this guy who wanted to be perfect and code everything on my own.
Yes.
And it's just stupid. So because it's not the main thing I'm doing. The main thing is not I'm building libraries for doing the best NLP or doing the best backtesting. I'm using this. I think my part or my job is to build all these things together, that they are working and they are on a pragmatic side. I can manage as one person.
Okay.
Yeah.
So Attila is, for example, asking, do you scrap several times per day or just once? How fast is your system at the end?
I'm trying to improve this because I've seen the information efficiency is rising, just because the speed of information is so much faster than was 1 year ago and 10 years ago. So I try to be better, but at the end, some informations they have not that much data points. So you cannot have this information often than once a day or sometimes once a week. So I'm also using some economical indicators, and they are just once a month. So I cannot push it to the seconds.
So depending on the source and how updated it is, you scrap several, like very fast to very slow.
Yeah.
I want to speak a little bit more about the system. So I understand you have libraries, you have your own frameworks, you get the data in. Does your system run in the cloud, or is it on a physical computer on your dorm room?
It's on my physical computer on dorm room. It's just, I don't know how to say, but I'm a bit.
I don't know where he's living. I mean, just during Corona, he was living with his ex-girlfriend on the countryside somewhere random.
No, it was just a situation at the end. To be honest, I have to be paranoid a bit, because when you're building codes like this and you are doing this, I'm always very protective about source code.
Yes.
And I don't trust at the end on this level clouds. So and I don't need it, to be honest, because I have not that extremely high problem with big data. So because some data I'm using, they are not that often. I'm not a high frequency trader or something like that. I have at the end I'm doing on max 5 trades a week. Okay. So it's not high frequency. And
5 trades a week. How long do you hold a position in average? You said
something like 30 days.
30 days. So you make 5 trades per week, 30 days, but you have exceptional returns with this strategy.
Yes.
And this comes to a question by Slim. And Slim, I hope I pronounce it right here live. Yeah. I should ask you about the trades you made, or can you ask Raul to talk about the trade he made that resulted in losses based upon the strategies he used for his winning trades?
Okay. He wants that I'm exposing losing trades. Well, there is Forex.
Just jumping in, I heard that it's not about winning all the time, it's just winning more than you lose. So you lose money, I assume, and you win money. Explain a little bit about where do you lose money?
Yeah.
And what you learned from it and feed it into the system.
Yeah, it is. I just posted also my metrics from my account, what is live tracked, and every day is checked by the World Championship of Trading. And in this account, I have 93% roughly are winning trades, and also 7% are also losing trades. So keep in mind, I had also losing trades. And this is
interesting, because I looked a lot into hedge funds. A lot of hedge funds started with AI, so they came to me. I looked at many AI-driven hedge funds, and they were just like, "Hey, we had 55% winning." Yes, and that was already good, because they were beating the market by 1-2 points.
Yeah.
So 93% winning trades historical, and 7% you're losing.
Yes.
and that is enough to make a surplus.
That's enough because at the
Okay.
moment I'm running with a profit factor of 24. So just to explain the profit factor, every euro I'm putting in, I get 24 euros out of the system. So the profitability is crazy.
Again, so we assume you have 1,000 euros you put into the system. In 93% you get money back. At 7% you lose money.
Yeah.
But do you get each trade 24
No,
times more back?
it's an average. Yes, it's an average just with losing trades. The profit factor also includes my losing.
And what, on a day or in a week, on a month?
No, on the whole time period. So on the time horizon, I'm doing this.
Like 30 days per trade?
Per trade. Yeah.
I like it.
Yeah, it's cool.
No, let's come back to you because you're beating the market here.
Yeah.
And I would say, again, it's risk. He's a one-man show, so he's beating the market with his own money and sometimes virtual in the past. And that's good. You're using money. You also traded, by the way, for large banks and corporations. Did you use your own system or did you use their systems and just optimized it?
Well, to be honest, I'm doing trading systems now very roughly for 20 years. When I was a teenager, I started it, and with AI, I'm developing since 4 years, 5 years. I tried it before, but to be honest, it doesn't work out because 10 years ago there was no good libraries, there was no good things you can do it.
Okay.
And with AI, I think it's just 4 or 5 years. And well, at the end, it's just the cool thing is I have not to code everything on a algorithm because the algorithm is also learning, and I'm a lazy person, okay? And when you're a lazy person, machine learning is better for you because it learns for itself, and I don't have to learn all the time and watch the markets and adjust the systems. And this is where I started, and this what I'm doing now I have not done for anyone before. I always wanted to be protective, and this is what I'm just doing for myself.
So in the comments I already read from Rainer that he says 7% losses, that's a crap system, you should be president. Which I think if you want to be president in the United States, I think that's not a positive, but I get it.
Yeah.
So I would say you're very risk adverse, or?
Yeah, I'm very risk
I mean,
averse.
you make very few trades.
Yeah.
Second question there is, can I scale? So could I put more money into the trades and still have the same output? Or is it only working because you have very little money depending on the size of this? Like penny stocks, if you buy too much, you are influencing yourself.
To be honest, and this is the craziest thing about, but I have to get this more in a context. This is just the results of this year, and also this year the sample size is not that high because to be honest, I'm running far above my expectations, and this is not my long-term winning rate at this market. It is not possible for a human to do this on a long term. I was just kissed by variance, and I will be fucked in the next month. I don't know, but I think this is not sustainable. But as you said, yeah, it is scalable. It is extremely scalable. Just because I'm trading the currency market, and the currency market, we are talking about something like 8 trillion revenue every day. So this is not a problem to use billions in one trade. You can do it. It depends on what is your currency pair. Euro US dollar is working, US dollar yen is working, but of course if you are in Swedish krona, it's not working.
So this competition, this Forex Trading World Championship, they tap into your portfolio, they see it, so it's real.
Every day.
They measure it, and it's only your own money. Right?
Yes.
Do you leverage, or is it 100% equity?
No, I'm also using leverage.
You're using leverages?
Yeah, I'm using leverage.
So you're using, what is it, options, swaps, calls, puts, like all these fancy terms. You should either know if you want to use it, or if you don't know, don't put your money in it.
Yeah, well, I'm leveraging it, and the things in Forex, the most of this stuff is OTC, over the counter. So I'm directional in this competition because options it is account not allowed, and so I'm directional, and you are leveraging it with the money from the bank. So the bank or the broker is providing you leverage. And I'm using not high leverage for Forex because Forex sometimes on the retail side they are leveraging up you to 100. So 100 times your equity. But this is just crazy. You can imagine 1% in the wrong direction and you are dead. and my average.
Did you ever lost like painfully much?
Yeah, of course. I mean, I'm trading since I'm 18 years old, and I had also big losses, and it was not cool. Because if you're losing money in a casino, I think it's a bit cool and a cool atmosphere, and
not for me. I hate.
I
hate losing money.
Yeah, I also hate it, but I think everything is cooler to lose money. But
if you're having a tuxedo and it's shiny and you have liquor,
then it's cooler. Then you're sitting at a screen. And you wake up and something is happening in China or Kim Jong-un and so on, and you see, what the fuck? Yeah, and this is something, it's not cool. I think it's the uncoolest way to lose money because no one sees, no one is applauding, you're just losing money. And of course I also lose money.
So let's jump back to your AI. So today, at the beginning it was, I understood, a trend predicting signal. It was giving you signals and you were trading.
This was at my teenage time, but now I'm on the other side. I'm mean reverting. So this is mean reverting. So I'm searching for panic or euphoria.
Right.
This is what I'm using, I think, the most of the time. Trend following was just at the beginning.
Okay, and you're looking for the signals, but today your AI is trading for yourself.
Yes.
First question, I know but is it legal that AI is doing all this work?
It is legal.
It's legal. So no regulation, no protection for human rights. No one's going to the street and say, hey, the AI is taking my job. The AI took a lot of jobs out there. We all know how the stock used to, yelling and selling and buying. Today it's all about AI. And for me, so your system is mimicking your behavior.
Yes.
So you build, like, I call it, a copy of yourself.
Yeah, the thing is, I trained the system very much how I have traded. So what I have done manually or later with trading systems, I just trained on these time series I'm looking at. So I think the most people are doing this wrong. They are just going on all data. So they have extremely large sample sizes of different data sets, but it doesn't make sense. So this is what I see a lot of in articles. I'm seeing also on GitHub when I'm looking at codes, think, what are they doing? For example, they're using technical indicators, and these technical indicators are based on the time series of the price. But this is also in, so this is implied, and you don't have to add it again. It's just stupid. So I just put all this alternative data, and this alternative data has some hidden information, and this hidden information is not priced into the markets. And this is what you are looking. Wow, you can go as we talked before on Twitter. You can go on insider trades. For example, what insider is buying what stock. And if you want to do it really properly, now if you want to get one time series of me, I can show you this, but it's very complex because the most people say, okay.
So let's jump it back. So the CEO of Wirecard, he purchased stocks before everything went bust. So that was like, it was, they said, an insider trade because he didn't announce it in public, something like this. At first, how do you recognize an insider trade?
Well, you get the databases. In the US, they are public. In Germany, they are also public. Okay. So you can get these databases. And as I said, for me, it's not important to get it in the first second. So
so speed is not that crucial.
For me, not. I'm not in the high frequency sector because the competition is very high, and I don't want to compete with these guys then. So if you want to do it really professional, then you are not looking on what CEO bought and sell. So you have to go, for example, what size is he buying? So this is very, very interesting. It's a CEO of a big company who has a salary, and just, the salary because they are also public. You have to grab the salary of the CEO and the amount how much he's investing. And this gives you the signal of how confident he is buying. And if someone who is earning 10 million...
AI is doing this today.
Yes, it's doing this.
So you have trained in AI to get all these sources.
Yeah.
And you don't even have to double check it anymore. It's doing on its own.
No, I have to double check it because it's always a big problem with my APIs.
But the AI is executing the trade without asking for your permission?
No. I get a signal, so I'm doing this.
So you're still executing on the trade?
Yes, I'm executing all trades. I am as a human doing all the trades.
So I have to correct, maybe it's not an AI.
It's hybrid.
Close.
It's a hybrid AI. But at the end, it's very, very tough to get all this information on this basis. You can use them because, as I said before, someone who is earning 10 million and buying for 100,000 stocks of their own company, the signal is very weak. And when you have a very stupid system, he buys it because the CEO have bought it. It's bullshit.
So your system is a lot of learnings that how you weight all this information, how you label them, sort them. And then your system, and then let's speak about the impact of your system. You told me before you were able to monitor 100 asset classes. So I speak about 100, let's say stocks, commodities, etc. That's still a lot, but you monitored them, and your system was telling you where signal is. But that's when you started using more AI, so self-improving, this scaled to over 1,000 asset classes. And you told me with even a better recommendation. So when the system tells you to buy something, and you do it, it's better than before when you did it on your own without the AI.
That's a pity because my system is now better than me, so far better. And I made this year some mistakes because I was overruling my own system. In March, I got panic, like everyone with Corona. And I think we also had communication this time. Yeah,
interesting. I know you. We spoke, and you were everything is red and it's going down.
It was a tough situation, and then I just reduced my position sizing extremely because I don't want to go broke at this situation because no one knows exactly what was happening with Corona at this time in March, and I reduced the position. So, but now it's always easy to talk about the past.
But did you lose? So was your human decision to reduce the position, that amount of money you have invested, the right or the wrong one? In contrast, so you shouldn't have done, and you should have followed your system, and you would even have made more money.
Yes, but I have not done it.
But you were human.
Yeah, I was human.
And you failed.
I failed, yeah. The problem is, at the end, I think I'm not a talented trader. I don't know if they are a talented trader because it's against our human nature to trade.
Interesting.
But I lost money. I left money on the table because I was reducing the size of my trades.
Okay. So John asked another question, which is fit there. It's on the other screen. No, I will do it. It was from Chris. This one, Chris will. Do you use neural networks? Yes. In what case, or what forms of machine learning do you use, and what language do you use? For example, Python.
For what?
Python.
Okay. I'm using Python, of course. I think it is the most universal language you have to use. I would recommend it to you if you want to start with this. I'm using primarily at the moment TensorFlow, and I have some older systems in Keras. These are the libraries for machine learning. I have also the other libraries you need, like Pandas, NumPy, and so on. And of course, sometimes you have these API libraries, so this is also necessary. And in the machine learning field, I'm using TensorFlow primarily with LSTMs. So because they are...
Schmidt-Schuwer will be happy.
Yeah, they're the best for time series forecasting. So I have tested a lot of things, and what was the best for forecasting with the highest accuracy, and for me it was LSTMs, and especially if you want it really technical, but I don't know if we are going too much in detail. I'm also using the LSTM, not in the basic version. I have the most of the LSTMs are with peephole connections. So just because they are better when you have rare but extreme outliers, and capital markets have rare and extreme outliers. So, but you can also use LSTM in the basic architecture. At the end, this is not the most important thing. Yeah, I think the most important thing is you need the domain knowledge, and you need the data, and you have to compile it. This is extremely important. This is the most important thing. So I don't think that is the big difference if you say, okay, Keras or TensorFlow. TensorFlow is faster for me, it's better, and I think it's the best framework at the moment on the market. So use TensorFlow, but at the end, it's more about the data.
So what I like about you, Raul, is you don't sell the software, you don't work for another bank account, you do it on your own with your own cash and you learn. But your options are you just increase this. But I also know from our past talks, you could make a fund out of this, which would be, by the way, a hedge fund, I think, that technical regulation. So you have a lot of options out there. By the way, if you want to work with Raul, we might do a webinar one day where we'll train this in detail. We'll figure this out. So if you're interested to learn from him, we might figure it out a webinar where we will go through all his learnings and maybe help you to build your own system. This is one option. But Yes, it's all about the money at the end. And then we will see maybe in a year or 2 years where Raul will be in his own setup. I want to touch another third topic. We first spoke about you, then about your system. Now we want to speak a little bit about your passion, which you call UBI, unconditional basic income. So we will touch this. If you have questions in the meanwhile, I will collect them. We might even overextend. So let's say you have to go after 1 hour, you can watch the replay anytime. Here on Swapcard, because it's a YouTube link, we will also cut and edit the video and we'll publish this on our social media channels and our playlist, so you can share and watch this whenever you want to. And you can contact Raul on LinkedIn, Instagram. Follow me on Instagram, he likes this.
Yeah. Also TikTok. Okay, no.
Still.
Yeah, but it's a private account. Don't add me there.
Let's talk a little bit about the bigger picture. Because I have following problem which I see with AI. AI leads to a accumulation of power and wealth. And if we don't have a regulation system which is distributing this, you only have guys like this. We spoke about in the beginning, he might be the first trillionaire just for trading. He could. His vision, his ideas. But if you want to have less people like this and more, sharing the wealth, because if you're smart and with AI you can excel everyone, we need something. So you say UBI, unconditional basic income, could be one way to distribute a little bit of the surplus to society. Tell us your thoughts behind this.
Yeah, well, if you just look at the numbers, you can see there is even more on concentration on income, and the concentration on wealth is far higher than from income. And digitalization and automation is for me leading to a society in the next years with mass unemployment. So for me, it is very, very important to get this topic into politics, to get this topic as the number one topic, just because we are going this year, and I think Corona was something like a catalyst for a lot of cut-offs and layoffs in the workforce, not in Germany especially, but globally, and automation and also digitalization will lead to a very, very bad situation for many people in the workforce, and we have to mitigate this, and we have to approach this. This is very, very important for our society, and this is what I'm fighting for, what I'm really into it, what I'm committed to use AI for good. And this is also why I have done this speech, because I hope that someone out there is imitating me and building an own system, building his own universal basic income. It would be cool in 1 year to get people.
This is your UBI. I say every entrepreneur out there needs his own UBI. It can be rich parents. It can be you made a fortune before and you're living on this, you're building your system. We all have a certain income source, it can be real estate, etc., which is giving you a minimum guarantee, so you are free in your mind, you can experiment, you can go out there and you take risks.
Yes.
So my vision of UBI is just to take, I'm a little bit like Sanders there, everyone should have free healthcare, free education, and free housing in a certain degree. Yeah. So I don't want that everyone is afraid of being homeless. And I think if you're losing your fear, you can taking risks, you can be creative, and you can take a job, just learn from it, or you can do an internship, etc. So first you say the first step is you build your own UBI. But you're exceptional. I mean, you're wearing red pants. Yes? Yeah. You're breaking, you're edgy. Yeah. And I would say most of the people today here, yes, you're guys out there, you're like us. You're edgy, you're creative, you might be brilliant in your area, but not everyone out there. So the question is, how can we make an UBI for everyone? How can we help those who are not smart like this?
Yeah. Well, there was, I think, the last month there was a cool paper from Oxford. It's about the windfall clause. When there are profits from big tech using, for example, AI, and this AI therefore gets extremely high automation.
The best case is Apple currently. Apple is the highest taxpayer in the United States, and I think I looked today, they had 230 billion in cash outside of the United States. They transferred and they paid an average 10% on this.
Yeah, and we have also the problem. Big tech is, for example, in Europe, not really paying the fair share
No, they
of
don't.
tax.
They don't.
And that's unfair because when you are a restaurant owner in Germany, you have to pay your tax and you are paying a fair salary and all this stuff. But when you are too big and you are in tech, you are not paying. And I think this will be one of the first things we have to arrange on an European level. They have to pay tax.
Okay.
This is the starting point. Okay, this is just a starting point. But
Okay, we start first. When we talk about AI, we need AI regulation to tax it. I'm, by the way, for data export tax. So if, let's say, Facebook is using my data to sell advertising, either the earnings are taxed, which is not that easy, or at least the data which is used might be taxed. So something like this. And by the way, everyone asking questions out there, I will collect them and I will ask Raul later because they're technical. So we need taxation, but still UBI. I mean, that's your topic. So taxation fair, I'm fine. How do you lead this to UBI? Because my problem is most parties thinking you have the right to work, and that's the goal of life is to have a job. I would say no, the goal of life is to be human, to live freely, and if you need a job to have more money, or if you have a job because it's your passion, you enjoy it, that's something else. Yeah. But why do we have to have a basic right to work? Because we already had comments out there, we will have new jobs created. It's not about loss of jobs and there won't be new ones. It's about why don't we work for a society where AI is doing the jobs and the work, and we have the option to work, but not the need. Let's say I build the super AI, which is trading, and then the AI is owned by the pension funds, and the pension funds is just using all the surplus to pay retirement money, which we have in this kind of idea. But I would say a pension fund, retirement fund, is great because it is distributing like a conditional income for all the retirees out there. All the old people benefit from a better trading system.
Absolutely. So I think we have to do it more on a governmental level, that we are going to get the surplus, because the productivity, and we can look at the data, and this data for all Western countries shows us that the productivity is rising. But the problem is just the share for the employees is declining. In the last 10-20 years, there is declining. There are a lot of effects you can see in the US, you can see in a lot of different countries, that at the end, the owner of capital getting every year more of this cake. And this is not fair. So, and with the UBI, we can make it more equally. That everyone gets.
I don't see the logic there, but I will come to this. So, from my own experience, I have a venture capital firm, I have investment firms, but also hired myself in my own company. If I pay myself a salary, I pay up to 60% taxes in total in Germany. If I sell shares, I pay 1.5% taxes. Different level, but what I mean is, capital gains are little tax. Labor is taxed a lot. So I have a poll there, and if you have not answered the poll yet, you can do it for those being live here. And the question is, what should be taxed? Should AI be taxed and similar? And 8% said AI should be taxed higher than humans. 17% said AI should be taxed less than humans. But the majority, 75%, said no. Earnings from AI and humans should be taxed the same. And honestly, that was my answer too. I believe we need to have a system where it does not make a difference. Because what we currently have is we have a system which gives us a huge incentivize to let people go and use AI and automation to have an increase, because AI surplus is taxed less. But I think that's a wrong incentive system. If it would be equal, people wouldn't fire people just for productivity, or just for tax productivity. But we will have to figure this out. So we are officially coming to the end. But I would like to come back to 1-2 questions which we still have. Okay. And I think this was, do you use stop losses? Yes, which is from John. If yes, is it a physical or mental stop loss? If not, is your trade in invalidation point, or how do you decide a trade has gone wrong? So yeah, that's a good question for
okay.
now.
That's cool. I'm not using stop loss. It's just based. The most of my accounts are running on options, and in options you have the problem the markets are very illiquid. So if you have stop losses or if you are orders like this, you get ripped up from the market makers. So I don't want to have this situation, and I'm more from the risk side doing the bet sizing in a very adequate way. So if a position is running against me, it's not a very big harm because I have a diversified portfolio of positions, and the size of every bet in this case is not destroying my whole system. So I would not recommend to use stop loss, especially when I'm using options. It doesn't make sense for me.
I have to learn a lot. I use a lot of stop loss, but I only trade stocks, and I do it like long, and if they crash, at least what I learned, Wirecard best case, if it's losing, get out, because humans not realizing losses like, oh, I already lost 50%, so I'm losing another 50%. It's interesting. Another question which we had there, and it got 3 likes, is have you tried attention networks in comparison to LSTMs?
Well, I have tried a lot of different networks and architectures, but to be honest, at my point where I'm working now, LSTMs was the best network just for my cases. And there was also this question about how to use the classifying models, for example, in charts and so on and so on. Yeah, you can do a lot of cool things and a lot of stuff. But as I told you before, my problem is just I'm limited in time. So for me, it was the pragmatic way, and so I'm stick to the LSTMs, but I'm also, as said, I'm using and trying other systems and architectures for better results. Yeah.
So you used the title, you wanted this, how to make money while you sleep. I know that I think you don't make money when you sleep, because if your system is giving you a buy or sell signal and you sleep, you don't make money while you sleep.
Yeah, that's correct.
So at the end you make an active choice.
Yeah.
And second is, what can others learn from this? I mean, we know we have people here from Deutsche Bank, we have from SoftBank, we have a couple of private equity funds, family offices, but also technical people out there. How can they benefit from it outside of hiring you?
Yeah, but okay. Well, to be honest, do it. I would say the most important thing is the data. Search for data, what is not like pricing data, volume data, and so on. Search for alternative data. This is, I think, the most important thing. Don't go in too large sample sizes, and don't go too long ago back in the history. I would not recommend. I have seen some system designers who are using data from 1985. This is bullshit, okay? The market structure has changed a lot since 1985, and we have a whole we have more faster with the information efficiency, and so on and so on. So don't use that old data. I would recommend use data, for example, for 10 or 15 years. 15 years is a bit better if you go back like this, because you have the financial crisis in your data set, and this is not bad to train with this data. Okay. So 15 years is good, but sometimes you don't have some alternative data so long, so it will be a bit hard for you to do it in this way. The next thing is don't, and this is I have seen so often, and this is so wrong. The people say if you are building one system and it has to work for copper futures, also for the Euro stocks, and also for let's say Euro US dollar. That's bullshit, okay? Every asset class has a very own characteristic and has own behavior. So if you want to trade currency, you have to build a system for currency. And even when you want to really go into detail and want to make it really, really good, for me, every currency pair I'm trading has an own system. So because I have a different data. And this is something you have to keep in mind. You build a system for a very specific asset. And don't build one system for all assets because it's not working good. So okay. It's just
next question. How often do you check your portfolio? Several times a day, daily basis, push notification in your systems? Like, how is your system communicating with you?
Yeah. At the end, the system where I get the signals is isolated from my trading account. So I'm getting the signal, and then I can make the trade. And because I'm bit lazy, and I don't want to be someone who is, oh, I missed this trade, and if I'm not doing this in the next 5 minutes, it's wrong. I have the advantage using options, and I'm an option seller. So in this case, I'm not so extremely on point. I don't have to be that. So if I get a signal, I can also make the trade tomorrow. Sometimes, of course, it gets worse then, but it's not so time critical. And I'm checking my positions every day, of course, and sometimes every hour, but there is no necessity to do it. It's just because I'm interested person and love what I'm doing. Okay, this is, of course, then I'm checking it, but it's not necessary. At the end, I can just look one time a week on Friday and placing my bets on Friday. So it could also work.
I think that's a very interesting system because it's the opposite of flash trading, etc.
Yeah, it's completely opposite.
German asked about your money management system. Yes, he called it how you do stop losses, etc., or trading stops. But at the end, your keyword is money management system.
Yeah. Okay. Well, I'm a very risk-averse person. So as a risk-averse person, I'm not optimizing on maximum profit and not optimizing, or for example, for the highest risk-adjusted profit. So this is very curious because no one else is doing this, but I want on cash flow. For me, it's important to get, in the best case, every day an income, and every week and every month. So my system is more based on constant cash flow instead of running for highest profit.
Okay.
And this is something different because what you are asking is, I think, the best money management to get the best risk-adjusted returns. And just to make it clear, I think the best way to do this is with Kelly criterion.
It's all about cash at the end.
So use the Kelly criterion, but I would recommend don't use the Kelly criterion in the original version because it's too aggressive. You cannot hold it. With Kelly criterion, sometimes you have 3 or 4 positions in your portfolio. It's very, very hard, and one position is 60% or something like that. Kelly criterion can be very hard. So practically, if you want to maximize for the gains, you use something like a half Kelly criterion or a 30 Kelly criterion, something like that. You have to figure out, and with this you get your position sizing for the right positions. But to use Kelly criterion, you need your win ratio and so on. But I like this criterion, but I like this only when you are maximizing for profits, and I'm not maximizing for profits.
So to understand, you have a trading account, one or many, and your system is independent from this. You manually buy it, or your system is maybe proposing it, but you have cash there and you take out some cash to live from this. So it's not about having the highest portfolio value, but to have a real return on cash, and this cash you are living on. And the rest you use to reinvest.
Of course. The bad thing is my returns this year were too high. So I'm running too much above my expectations. So when you're building a system, you get an expected value. So and this expected value, long term, you see, okay, this is my possible win rate.
He's complaining he's making too much money.
Yeah, it was this year was crazy because I know that I'm going to get a drawdown. I don't know when, but I'm going to get a hard drawdown because I'm running extremely too high. So just to imagine at moment on my account what is covered every day, I'm running with a Sharpe ratio of 20. Okay, this is completely insane. This is not sustainable. This is
tell everyone else what a Sharpe ratio is and why 20 is insane.
Yeah, it's one of the most famous risk or let's say return to risk metric, and just to get a feeling. When you are hiring, you are on the allocation side. Let's say you're an insurance company, family office, you are whatever, pension fund, and you are searching for great managers. So, and Sharpe ratio is one of the selection criteria. And you can say something above 2 is exceptional. This is crazy. This is the killer. Okay, if someone is here in the market with a 3, it's okay. This guy is close because he's a lot of money, and to run with 20 is just
I did not understand this. 20 means what? You are very risky, or you're just very successful?
Too successful.
Too successful.
Far too successful.
So that's why we speak about outlying. A lot of very successful traders were not always able to do this with a couple of larger amounts.
Yeah, but at the end, my sample size is too small. I just have several hundred trades, and with several hundred trades or transactions in this case, my sample is just too small. And to be honest, I'm going back. I don't know what is my real rate. So hopefully it will be something like 10% of what I'm running now, because this is crazy enough, because I'm trading the currency market, and just to think about the currency market is the most efficient market. So it's the hardest market to gain some extra return.
Oh, yeah.
So if you have there at this market and Sharpe ratio of 2, you are crazy. You are God. Okay. So
but you have 20.
Yeah, it's a problem. I know. It's
what is 10 times more God?
I don't know. It's a problem.
Super AI.
The crazy thing is, someone I have worked a long time, someone who I have worked a long time with me and called me just days ago and have seen an interview with me, and I explained the metrics, and it just said to me, no one will believe your numbers, they are just too good. And I say, yeah, they are too good.
Okay, last question from my side, moral one. You're making money and you don't care with what, right? At the end, it's you're making money and someone lost at the end. Maybe the currency is going down, everyone is starving, and you're making a fortune.
Well, yeah, it's not correct, because there are people, let's say, and there is a panic. And these people who are in panic want to sell. And if there are not people like me who buy this stock or give them money, then the market will completely collapse. So
you exploit weaknesses of other humans.
I'm helping them because I'm buying the assets.
I heard this before. Oh yeah, stop loss is great, or like buying options because hey, I'm helping them to sell.
Yeah, I'm helping to sell because I'm on the other side. So.
That's very nice of you.
Yeah,
that's very friendly. Good, everyone out there. I will have some closing words. So for you, Raul, thank you. You may now leave the stage. For everyone else there, if you want to get in contact with Raul, contact details are out there. We will do a follow-up session, or maybe we'll do a webinar with him. So, thank you, Raul.
Bye.
Yes, you clap for him, virtual. Thank you. And this is what's written here on my screen. It's called the final slide. So if you want to follow us, if you want to stay updated for upcoming events, whatever we do, first is you get an email from me, regular, but also check us on LinkedIn, Rise of AI, Twitter account, Insta, where we'll do some behind the scenes, and Facebook, the same. And second is we will have the next virtual chat in 2 weeks. It's again on Thursday, again at 11 a.m. It's in 2 weeks, and it's with a member of the European Parliament called Damian Böselager. He's the founder of Volt. Volt is a pan-European, it's the first European party, not a national one, it's a European party. He got elected, he's there, and he's working on AI data strategy. So AI/data strategy. I will invite him in the show. I will grill him a little bit of what the AI wants to do with the data, what is the big master plan behind AI, and what is the impact. So it will be, like today, AI focused, but even maybe more on the political society side. As usual, we have this mixture. And that is the words from me. I hope you enjoyed it. I can't tell you give a thumbs up because we have no rating system. Just follow us, stay tuned. If you have recommendations who to invite, who I should talk to, just send me a name. I will hustle as long and then try to get them in the show. So it was a pleasure as usual. I wish you a great day. Enjoy your day, and we hopefully see you again in 2 weeks.